Well, howdy there, folks, and welcome into today's video. Thank you so much for joining me. As always, today we got to get into what are my next potential stocks out there that I am interested in buying. That's what we're going to get into in today's video, guys. Please excuse, by the way, my crazy, messy hair. It's Friday. I'm recording this on a Friday, so, needless to say, as the week goes on, it's very, very busy, and by the time Friday comes, man, I'm just like, I can't even worry about my hair anymore. So, if we think about over the last few years, I always have kind of a group of stocks that I'm kind of like buying at a certain time, right? If we think about like late 2018 and in 2019, kind of like the main stocks I would talk about all the time and we're buying heavily was like Facebook, Skyworks, Tesla, right? And when it came to those sorts of stocks, it's not like I'm looking to sell out. Like I still hold, I don't know, probably like $1 million worth of those three stocks, right? And, that's several years later. So a lot of times when I buy into these stocks, I'm not looking to move out of them or anything. A lot of times they're there to be like long-term holds for potentially years and years to go in the future. Then we get to obviously the 2020 group. 2020, I could have put probably 15, 20 different stocks up here. It was a year of a lot of stocks. I just think that some of the most popular ones I bought in 2020 was probably Planet, right? Obviously, that was a huge one. Very Good Food Company was obviously a pretty popular one. Upwork, Nordstrom, Revolve, but there were a lot of stocks we got in. And I even got in a weird thing like USO. You remember I was in USO for a little bit? That actually did us very, very, very well. But yeah, just like last year, it was a special year, right? There was a ton of deals everywhere in the market, and a year like that, I'm going to own a lot of different stocks, right? But that was kind of some of the core group, right? If we think about the past 6 months, it's been all about Tattooed Chef, right? Walgreens, Corsair Gaming, and then recently Coinbase been buying that one, and Voyager as well, right? Now with this group over the let's call it the past 6 months group, right? This group is almost done in terms of me building out the positions, right? Like Tattoo Chef, I have a very large position built there. I believe it's 7 figures. I'm not, if that stock goes down for any reason, I'll be happy to buy more, but it's not like I'm actively looking because I need more Tattooed Chef shares. I own a lot, okay? Same exact thing with Walgreens. Unless Walgreens tanks back down to $40-something, I'm not interested in buying that one. I have 7 figures in it. Corsair Gaming, across my accounts, maybe I have about $500,000. That's kind of what I'm willing to have in that stock. However, with that being said, if for any reason that stock drops to the 20s, I will be happy, and I mean in the 20 range, like $28, $27. I'll be happy to buy some more shares of that. Coinbase and Voyager, I can definitely add a little more shares of both of those, especially if they continue to weaken. But this group is almost done in terms of me buying it, right? And now that one's just going to be, a hold over the next several years, and we'll kind of see how things play out there, right? And so now I'm looking and I'm like, okay, what's my next group of stocks, okay? Now that I'm finishing up this group, what's that next group that I'm buying into? And that's what we're getting into today's video, guys. So I hope you enjoy this. As always, all I ask in return for this video is that you smash the thumbs up button for us. That helps out huge in the YouTube algorithm. I appreciate all you guys for being here. As always, much love. If you want to check out my private stock group, private Discord chat, and learn more about that, check out the first pinned comment down there. Alrighty, guys, let's get into this. First stock up here of the bunch is actually Zoom Communication, Zoom Video, okay, ZM. So this stock is actually starting to interest me, okay? And I guess to tell you, especially if this one starts to hit $200, which, let's be clear, the NASDAQ goes down 1 or 2 days. Let's say it goes down Monday, Tuesday. This stock could already be in the 200s. Like it's already, getting down there, right? 317 here a day. And at the lows of the day, it was at 316. So when it comes to Zoom, the hype has completely left this stock now, right? It's just the way it is, right? We go back to last year, it was ultimate hype around this stock, and for good reason. It wasn't like it was just blind hype in Zoom stock, right? You had a situation here in the world where all of a sudden all business had to be conducted through virtual meetings and things like that, right? Now, when it comes to Zoom, although, they got this huge pull forward in demand, all of a sudden, this is now a household name for every single business in the entire world. And that makes it really darn special, okay? Especially in any developed markets out there. Zoom is a place you go. If you're going to have a business meeting or anything, like you always go through Zoom first. It's just usually how it's done, okay? And everything else is kind of second behind that. Doesn't mean it's the only company that does what they do. It doesn't mean they're the only company that will ever be successful there. It just means they have that name. They're the Coca-Cola of business video conferencing, okay? And that's special, and that's worth something, right? Not every single person that drinks a soda is going to drink a Coca-Cola, but it's really nice when you can be that number one player in that market, okay? This is honestly one of those companies I look at and it has potential to develop into a lot more over time, right? When it comes to Zoom. So I'm looking at this stock. It's actually pretty decently attractive. I believe it's trading at a forward P of 81, right? Which, Zoom has some very, very nice growth going forward and likely will for years and years to go in the future. So now that all this hype is starting to die down around this, right? It peaked in October. That's when the stock hit that $588 on an intraday, right? Closed on October 12th at $559. Now that I'm looking at this stock, all that hype is fading away from it. And now you just have a company emerging, right? This is where I start to get attracted to a stock. When all that hype dies down, the stock price is falling and falling and falling, and it's looking like, oh man, all of a sudden the world's opening back up, businesses are going to start meeting again in person, blah, blah, blah. At the end of the day, man, like video conferencing is going to be massive for like literally decades to go in the future, right? So yeah, it's a stock that actually is very, very interesting to me, and is one of those stocks that could be a potential next generation ad for me. Okay, I'm strongly considering it. I got more research to do there in Zoom. So that's first stock up here. Second stock up here of the bunch is this stock. It's a very small market cap, $381 million. Adamera, Atom stock. Okay. So this one I'm looking at, I'm trying to understand it on a very high level. I've been researching it for the past, probably month or so, maybe a little bit longer than that. But when it comes to Adamera, let me speak on this one for a moment. It's let's call it high risk, high reward. So when it comes to Adamera, here we're looking at a stock here, right? That is almost pretty much like pre-revenue company, okay? Pretty much a pre-revenue company as of right now, all right? They basically provide a pretty interesting film technology that can help out the semiconductor industry, okay? Now, I'm trying to understand this technology on a much, much higher level than I do now, okay? What I understand about this company is kind of all the things they want you to understand about it, right? What they tell you makes this technology special. And that's good, but I need to understand it even deeper than that. And the reason I have to understand it even deeper than that for a company like this is because they're pretty much pre-revenue. They just have a customer that enter into phase 4 very recently, okay? That is a good sign for this company. I believe that's the first time in history for the company they've done that, okay? They have a lot of customers in phase 3, but the company and its technology has been around a while, and they haven't done much of anything for numbers. And so that's kind of the thing that scares me with this stock. I'm very, very intrigued because I do understand, like, if this technology, the big semiconductor manufacturers, if they can start using this technology and this company's making those royalties on that, there's no doubt in my mind that this could be potentially a several billion-dollar company. However, with that being said, they still got to do it and prove it, right? And so that's why I call this one a very high risk, very high reward stock, because it's like if this technology is really accepted in the industry, and the next thing you know, all these different huge semiconductor companies and manufacturers are starting to use this technology, that is going to be amazing for this company, and the royalties will be exceptional. But this company has been around for many, many years, and we have seen pretty much no business come from it, okay? So that's why I'm taking my time with this one. I'm really trying to understand on a very in-depth level, a very deep level. And it's definitely not one of those stocks I'm out there rushing into or something like that because, like I said, it's basically a pre-revenue company trading at $381 million as of right now, okay? But man, woo! It does have some upside. Let's just put it that way. If this one can really do what they claim the technology can and things like that, guys. So yeah, that's next stock up here that I am considering. Let's get in the third stock of this bunch. It is FUBO TV, FUBO. Now this one's intriguing. So when it comes to this FUBO TV, okay, this is a streaming company, right? And they really brand themselves as a sports streaming company. So if you care about sports, and you're thinking about signing up for a streaming service, you definitely, I think, would have to at least consider this company, because from what I've seen them pretty much have about the best sports packages you pretty much out there. which makes this company pretty interesting. And I think from also a branding perspective, I actually really like that they're branding themselves as kind of that premier sports related company, right? Because YouTube TV doesn't really brand themselves as that, right? Sports is just one component of that, right? Hulu doesn't really, brand themselves as that. Roku, things like that. When it comes to this company, they really are going out of their way to brand themselves as like, if you really care about sports, sign up for our streaming service, okay? Also, advertising revenue has been growing quite substantially, right? And there's potential play here on gaming, okay, and wagering and things like that. So that's interesting as well. So I look at this company at under a $3 billion market cap, right? And I gotta say, it looks really darn intriguing. It's off massively, off its 52-week high, right? 52-week high was $62.29. It's $20 here a day. So it's obviously, it's not the easiest space, and there are a lot of big competitors here. However, it's a fairly small market cap for the space. They're putting up unbelievable numbers. I looked at their latest quarterly numbers. They were ridiculous, to be quite frank. And so there's no way I can't at least consider this company. Because here's the thing when it comes to a stock like this, okay? One is they become a streaming, advertising, maybe even, gaming company over time. And maybe this is a $10 billion market cap, $20 billion market cap, something like that, okay? That's one potential, right? The other potential is, I don't know, they can't ever compete, and then they have trouble growing, but they're already growing, and they just, flounder around, and they're stuck in $10 to $20 for a long time to go in the future, right? That's another potential. Third potential is they continue to grow and grow and grow, and then somebody buys them out. Maybe a YouTube TV buys them out, right? YouTube. Or maybe some other streaming player buys them out. Or maybe, potentially, somebody like Comcast buys them out, right? Or one of those big networks or players in one of the more older companies, right? Maybe a DirecTV, Dish Network. You never really know, okay? And so that's kind of what I'm also thinking about as a potential here. It seems like it could potentially be a buyout candidate as well. So yeah, it's a really, really intriguing stock. I'm definitely strongly considering it. I started a little position in the stock, and I'm trying, right now I'm in the phase where I'm trying to figure out, do I want to, right now it's like maybe a $10,000 position. Right now I'm trying to figure out, is this the type of stock I want to build into a $50,000, $100,000 position? Is it the type of stock that I want to build into a $250,000, $500,000 position? Is it the type of stock I want to build into a 7-figure position? Highly unlikely I want to build this one into a 7-figure position, but I will say decent probability I could build this into like a 100K position or something like that, especially if the stock weakens at all in the short term more, okay? So that's that stock up here. Let's get into this next one of these bunch of the next generation buys. And that could be Rocket, RKT, definitely a potential buy for me, okay? So this is a really, really interesting stock, okay? Here's why it's really interesting. Right now, this company trades at a forward P of 7.9. That's ridiculous, right? And that looks like the most undervalued company in the world, right? And they just are coming off a year where they grew revenues and profits unbelievable, right? But, and this is a big but, okay? But here's the thing. This company is expected to start seeing declines in revenues moving forward for about the next 1 to 2 years. Not next 1 to 2 quarters, the next 1 to 2 years. They're expected to see their revenues decline. And maybe in 2023, they start to grow revenues again, okay? And so this is what makes this company such an intriguing stock, is the fact that revenues are expected to go down and down and down for the next 2 years. However, it is trading at unbelievably low forward PE. Obviously, they've had a huge pull forward in any type of mortgage demand refinancing, right? They're huge. If you think about home loans, that's what this company is known for, right? They have other businesses as well, including auto loans and many other various businesses. But at the core of this business, it's around home loans, right? Whether it be new mortgages or refinances. And if we think about that for a moment, right? There's been a massive pull forward in demand, right? Because the housing market got super hot, right? And then you had unbelievably low interest rates, so everybody was refinancing. I think, I think there was one property we refinanced twice in the same year in 2020. That's like ridiculous, right? I mean, if you're thinking about getting a mortgage or refinancing, like 2020 was the best year ever. Like literally, I can't ever think of a better year if you were thinking about getting a mortgage or thinking about refinancing. I can't think of a better year than 2020, and maybe 2021 is the second best year, but the problem is interest rates will likely start going up, right? Which means refinancing activity is likely going to shrink even more and more over the next year or two. More, as far as this huge pull forward in housing demand, right? There's a decent probability that could start shrinking. And by the way, we've seen it, like three straight months, if I recall, existing home sales have been down now, right? So maybe it's already starting to play out a little bit. And so these are just some factors to kind of think about with the stock. And this makes it, not the easiest stock in the world to buy in the short term, especially if I was thinking about from a short-term perspective. Oh, no way. Okay. If I just had a 1-year horizon, I wouldn't touch the stock, personally. It's just no. But for somebody like myself that's looking out 3 years into the future, 5 years into the future, I look at the stock and I'm like, could this stock be a $30, $40, $50 stock, 3-5 years out? I think there's a decent probability. It's just no one wants a piece of this company right now because they know revenues are likely going to tank over the next 1 to 2 years. And so who wants to buy into a stock where revenues are about to go like this? It's a hard sell, man. It's a hard sell. There's a lot of stocks in the stock market, and to get somebody to want to, take that dive with you for the next 1 to 2 years, it's not the easiest sell, right? So I look at this stock. I'm actually really intrigued. If it continues to fall, if this is trading at 15 something today, I have to start a position in this. I just would have to. There's no way I couldn't. 17, I'm like, got my eye on you. I got my eye on you. It goes to 15 something and I'm in. And then if it falls lower and lower, I'll just build out the position over time and just hold it long term in. And that's about it when it comes to the rocket. Okay. So that was that stock. Let's get in the next stock up here of these stocks that could be the potential next generation buys. And that is AMZN, Amazon. I look at this stock. Why have I never bought this stock? Oh my gosh, the problem is when it comes to me and Amazon, I always have loved the company for over a decade now, but I always get too picky around pricing. And I'll be like, well, maybe it will fall a little bit more and I'll get it for just a little bit cheaper. And I always think that way. And it's just such a flawed way of thinking, okay, when it comes to the Amazon stock. I mean, oh gosh, there's been so many times I thought about buying the stock in the past and it was at much, much lower prices. And I look at the stock now and I'm like, why am I not starting a position? It's $3,200. It's trading at a forward P of 54. Forward P of 54 for AMZN with this type of growth ahead of it for the next 5-10 years. Like, I don't know when. I can't even conceptualize a time when Amazon is not growing. Like literally. I can't even conceptualize it. That's how much growth I think they have in future years, right? Eventually, someday, I'm sure they're going to run out of growth, but it doesn't feel like it's going to be anytime soon based upon the study I've always put into Amazon over the past decade, right? And so I look at this company, forward P of 54. The company's growing rapidly when it comes to revenues, and profitability is growing even faster, right? And I think about this company and all their business lines, obviously the e-commerce side. Then you obviously have Amazon Web Services, AWS, which is just a crazy giant, right? I think I remember many years ago, I believe it was Bezos said this, that Amazon Web Services he thought could be as big as the e-commerce side. Woo! Okay. And I mean, it's looking more and more realistic by the day, literally, which is just unbelievable, right? And I mean, you think about the advertising business they have, you think about all these other things they're getting into over time. It is a very difficult stock for me not to say, start a position, Jeremy, because, it's hard for me not to imagine the stock in 5 years from now being anywhere between $6,000 and $11,000 a share. And if that's the case, and I'm buying at $3,200, it looks like a pretty darn intriguing value proposition. And what are the chances the stock goes down over the next 5 years? Pretty darn low, in my opinion, because it's trading at a forward P of 54 right now, right? And the company's going to get exponentially more profitable in the next 5 years, in my opinion, based upon all the study I've done in this company. And so I look at it from that standpoint. I'm like, yeah, why am I not buying this stock? Why am I not buying this stock? So, yeah, Amazon, definitely a next generation potential buy. And maybe it finally happens, man, a decade later, and I finally start buying this stock. Or maybe I just continue to wait around, and then the next thing you know, it goes to $3,400. I don't buy in $3,600 and $4,000 and $4,500. And then I'm like, oh, I missed it again on Amazon. Oh, gosh, okay. That's that stock. Let's get into the next one of this bunch, and that is Palantir, PLTR, okay? So Palantir, I just started recently a baby position in this stock. It's like $2,000, okay? And so far it's doing well, but it's just a very, very initial position in the stock, okay? This is definitely one of those next generation potential buys for me when it comes to Palantir. I look at this company, it's trading at a market capitalization of under $40 billion. If I think about this company's revenue growth over the next 5-10 years, it's going to be a fun ride, in my opinion, when it comes to revenue growth. Based upon all the study I put into this company, it's hard not to imagine this company exponentially growing their revenues over the next, 5-10 years. And then if I think about profitability, the way I see it is this company has a certain amount of fixed costs with the business, right? And after that, because it's a company that's kind of at the intersection of data, artificial intelligence, the profitability that the dollar that hits revenue that makes its way down to net income is going to be a lot greater kind of moving forward, because they've already built out a lot of the business they need to build out. Doesn't mean they're not going to hire more employees or things like that. They definitely can, okay? I'm just saying it's like, as this business scales and gets bigger, the profitability is likely going to be immense. I've seen it time and time again when it comes to any of these, big kind of, tech giants as they grow. The profitability begins to get insane, whether we're talking about, more advertising type business models like a Facebook and a Google, or whether we're talking about, more software sort of businesses like a Salesforce or something like that, right? Amazon Web Services, right? Obviously, kind of at the intersection of data cloud, right? Amazon Web Services is, unbelievably profitable business model from everything I understand there, okay? And so Palantir, I think this can be a very, very profitable business model. And also, here's the thing when it comes to Palantir, I think their product's going to be extremely sticky. I think once you start using their product as a company, I think it's going to be a hard one to jump to some other product or just leave Palantir. I really do. The other thing is, in the short term, over the next few years, they essentially have a ton of share-based compensation that's going to kill profitability to a certain extent, right? Basically going for employees over the next few years. But from my understanding, after 2023, those numbers start to shrink massively when it comes to that share-based compensation, and we could be in a situation here where profitability goes from there's this headwind of share compensation kind of hitting the company to actually a tailwind moving forward for this company, which is really darn exciting. So absolutely Palantir is definitely one of those next generation buys for me, and it already is a position I just started. So hope you guys enjoyed this video. As always, hope you got a tremendous amount of value out of it. If you want to learn more about my private stock group, all the course curriculum, the private Discord chat, coaching, all those sorts of things, check out the pinned comment down there. Much love as always, guys. Don't forget to smash and peace.